Okay guys, welcome back to another episode 11 of Rebirth Holdings Pip Chasers, bringing to you weekly updates and weekly breakdowns of trades that we're looking at this week. And I've titled this one Back to Basics, just from how I'm kind of taking my trading towards the end of the year now. Having great discussions with Nathan over the past couple of weeks. It's always good to talk to people whilst you trade. People in and outside the market, but naturally, touch base with Nathan, and it's all about bringing those basics back into your daily routines. Even though I'm almost 2 years in the game, you always got, the game doesn't change. We may try to diversify it and make it a bigger deal than what it is, but ultimately what you was taught from day one, ultimately, if it's the right stuff, it's what you should oblige to and what you should stick to. And I want to share some of our basics with you guys today and how that can kind of impact your trading on a good effect. So if you can hear music in the background as well, it's got the house vibes on at the minute. It's a bank holiday. It gets me in the mood on a setup Sunday. So enjoy the music at the same time. But literally, I'm going to crack on with two currency pairs today. So I'm going to crack on with EURJPY, and I'm going to give you a top-down analysis. When we say basics, we're talking about the purity of the trades and the purity of the technical analysis that we're going to show you. So top-down analysis, I'm looking at a higher time frame. I'm just going to put a few confluences together. So naturally, I'm not sure if you can see it here. Let me make it a bit more evident. You can see a swing low is getting higher each time, so we're actually in an upwards trend. But up until the past couple of months, we've had a third trend line touch. So as you know, you're going to get a bounce, either a bounce to the trend line, perhaps to another key level, a break and a retest, or a false breakout. Now, as you can see here, just from a long-term perspective, you can clearly see that over the past month or two, we have broken out of that trend of the upwards channel. What else can we see from here at the minute? So obviously, ultimately, we're looking at the monthly time frame, so we can't naturally call this candle a complete candle for the month of August. So going off what we can see here, naturally, we've had that little, you could perhaps call it a tweezer top there, which kind of perhaps showed you how and why we've had that continued momentum on a monthly basis going into August. Now, again, looking at key levels as well, I'm actually going to step down to the weekly time frame to talk about key levels, but it's actually quite fundamental and important on this pair to what's making me think of my bias at the minute. So as you can see, I've got my monthlies in blue and my weeklies in turquoise. And as you can see here, I'm not sure if you guys have spotted it, but we had a massive mother candle here in January, when we had a bit of a fundamental market crash for the yen pairs. Now, prices worked in and around this range, which is also a monthly resistance zone of about 900 pips, give or take. Now, as you can see, for us to break out of the channel, the upwards trend, sorry, we would have had to retest our monthly resistance down at the bottom here. And as I can see here now, people may have started to buy on this long candle here, but for me, I knew that we had a rejection and a few wicky areas for price not wanting to break through. Again, it's all about those weekly closures if you're trading on a weekly time frame. And as you can see here, previous week we had a shooting star, but then we had it confirmed by, you'll see it more evidently on a daily time frame. You would have had last week's candle start by retesting that monthly resistance. So we've had a breakout, a bit of consolidation on a daily perspective perhaps, and then we've had a retest, and then we've had a weekly closure as a shooting star after testing that monthly resistance. So just from a higher time frame analysis, looking at this, obviously this trend line that we just broke out of, so you've got the one touch down here, the second touch here, and then, for example, we've had a break of the monthly resistance. Now we know that trend lines tend to meet up with 0.2. We've had a 0.3 trend line break, for example. So for example, from a long-term perspective, you could perhaps see on a monthly, for example, you could perhaps be looking for the areas of 109, 109, 500, being eventually met now that we've entered this new monthly resistance zone. Okay, so it's all important in regards to how you implement your higher time frame key levels, and obviously it reaps rewards in the long term. Ultimately, we look at the higher time frame, so you do kind of have to be patient and wait for those, as I said, monthlies and weekly candle closures. But looking at a daily perspective as well, you can perhaps see another bias or confluence that which kind of goes in my bias of a long-term bearish trend. So what I've actually got here is a descending pennant. So if I just do that, guys, and then if I extend that out, for example, you've got this triangle with a flat base resistance, and obviously the swing highs, are getting lower each and every time. So that ultimately just showed to me that we are in consolidation because price is rejecting the level of 117,500 pretty neatly. It was rejecting it for just under 2 weeks, and then on Friday we actually had a break underneath the resistance area. Now ultimately that was, as you can see here, I've had a little alert. Another key tool to use are alerts, guys. Saves you from monitoring the charts every single time of the day, as obviously you have other things to do throughout the day. It allows you to perhaps stop being trigger happy and trying to trade and expect that rejection, and obviously the trade to start whilst you're in consolidation areas. So naturally, I wanted to wait for a clear break of my 117,500 before entering the trade on this. Now, naturally, with a descending pennant, just to pull out a target zone on a daily perspective, if I just duplicate this, okay, my target zone will be down here. So naturally, we're looking around the 115s as a target zone for a descending pennant currently. As obviously on the higher time frames, I know that I'm now underneath the monthly resistance. So after breaking through it, retesting, can looking for that continuation, perhaps to obviously the longer targets down here at 109s, but also on the intraday, and obviously on the swing trade element, with the use of a charting pattern, I could perhaps look for targets now, looking at the 114,900s, the 115s. The reason why I've got a daily key level in grey here, simply due to the fact that if you go back to here, so you're talking 2017, we had a nice rejection and bullish momentum. So that's one price I need to look out for before perhaps seeing any major moves to the downside of my weekly and perhaps the monthly here. So I'll be looking at key level by key level as target zones on this pair. So for example, all I've used there, guys, is daily key levels, weekly key levels, monthly key levels, charting patterns, and a few trend lines. The basics that Rebirth teach, obviously in much more depth within the actual work that we do, the manual guide that we give out. So again, it's all there for you. But I'm going to also go through another currency pair, which is the pound against the US dollar. Again, I'm on the weekly time frame. Now, as you can see, it's pretty interesting, this currency pair. This currency pair hasn't been this low since the likes of December 2016. Now, how do I know that? Obviously, the charts tell me as well, but why is it a key factor for me? Because now, over the past couple of weeks, price did test my monthly support. As you can see here, 2 weeks ago, at the end of 2 weeks ago, we had a Maribosa close underneath that monthly support. Now, some people may have sold on that pair if they simply just knew what candlesticks were, not anything else, and then perhaps looking for longer short targets down there. However, just from laying out some key information and understanding the currency pair that you're trading, from back testing, from just knowing how this pair works around a specific price, it would have showed you and enabled you to perhaps not have been so trigger happy and shorted this pair. So around the area of 121, I knew before perhaps looking for any future shorts down to 118, the next weekly key level. see what happens. For me personally, I was going to expect some consolidation. I thought this is a key area, the 121 for the pound against the dollar. So I thought it's too easy. It sounds too good to be true for the pound to still lose so much strength, obviously from the start of the year. So this was a key area that I had alerts around and wanted to see how the price was going to play out on a week by week basis. Now that the time had came last week, I also wanted to bring into consideration my weekly trend lines and what would happen in and around my weekly trend lines. So let me just make these a bit more evident for you. There's one there, and this clearly shows that we're just in that current downwards trend. Now, as you can see, we had the mobiles, but then we had a false breakout on the third touch, 1, 2, 3. So again, before I perhaps entered any, for example, if I was short on this, I would have had the Maribozu. I would have had to wait for the retest and perhaps look for a daily indication for that continuation down. Now, from looking at this, I wouldn't have entered a sell trade because I haven't had the full break, retest, and continuation. A break of a trend line isn't good enough. I would be looking for that retest and a signal of a downwards momentum. That wasn't the case. Therefore, I knew that we perhaps wouldn't be able to be seeing any more shorts for the pound at the minute. So what I've had here is a false breakout. And as you can see, at the end of last week, I had a trade going that you guys would have saw on social media, on my Instagram, if you guys aren't following, for the price to push back towards the upside, perhaps retesting some weekly resistances here. So let me step down to what I was talking about. So I was literally just looking at an 8-hour time frame now, guys. Is, as you can see, once we reached the likes of 121, we had a lot of consolidation. So again, it's good to use your different time frames. And what I was waiting for was a clear break of this area here, which is around the 121,800 zone. This was an area where price was rejecting and rejecting. You could also call it inverse head and shoulders, which is also a sign of consolidation. So again, knowing that we've got the left shoulder, the head, and the right shoulder consolidation, we're going to get some sort of burst, hopefully towards the outside, to the upside, sorry, as we've got major resistances at not allowing the price to break to the downside. Now, we did have that break to the upside. We had the retest out of the consolidation zone here, which is a great opportunity for the re-entry, which I did. And then literally the case of meeting a target of 123, which I still have running as a psychological price over for this pair. Now, talking for the week ahead, as you can see now, so I've had a great 2 bullish weeks, with the second week being a nice firm hammer at the bottom of the downwards trend. I can see this pair pushing up a little bit further. Something to take into consideration is the moving average on the weekly time frame it's not far off the price in a minute, so I reckon there would be some sort of resistance around the 123 zone. But if we do and are capable of having clear bullish indications above 123, I could see this pair going further, higher further. So let me just make this a bit more evident to you guys. So if I was to get price action in and around closing above the 123 zone, I could see price working its way back towards the 124s and then eventually, hopefully, the 125s back into this zone here and working back in this range here. Now, for us to do that, we would have to break for the weekly resistance, retest, as this is a nice key area for this pair, and have a nice channel running towards the 125 area. So that's what I'm looking at the minute. As I said, I'm looking at the EU shorts and I'm looking at the pound against the US dollar, hopefully with the pound continuing its strength. But ultimately, I would be waiting to see what happens once my target's hit at 123, which would have been a nice, I think it was around 150 pips. As you know, because we broke out of a daily resistance, you never know. This psychological level may hold up and it might start retesting and continuing like that. Therefore, my next move on this pair is to see what happens at 123, closures above retests and bullish momentum candles towards the upside. I'm looking for another 100 pips minimum. If we get a rejection, we get wicky areas, consolidation, and then perhaps any sort of evening star, shooting stars, I will be trading it back down towards, obviously, the daily resistance. So 2 biases to look out for. Obviously, I'm in favour of the upside due to the higher time frame analysis, but it's just something great I wanted to show you guys today. So I'm going to leave it there for today, guys. 2 pairs, bringing it back to basics of key levels, price action, psychological key levels, the whole aspect of higher time frame analysis, and literally sitting on your hands and being patient. From there, with the right risk management, of course, can't really go wrong. So guys, one thing to take into consideration before you leave us today is any economic news this week and if they can impact the currency pairs that you're trading. So for myself, I'll be looking at any news impacting the euro and the yen, obviously the pound or the dollar. So looking at what's coming up, obviously I've got this filter to medium to high impact alerts. Naturally, it is a reasonable week in regards to data. But moving into Tuesday, you have got a bit on the dollar. The dollar looking weak in regards to its consensus against its previous, so the rates are looking to reduce, which naturally would be positive for the pounding against the US, and also would perhaps go with the bias. So naturally, again, economic news, it just perhaps adds volatility to the market. Won't necessarily change the market's direction, but also, again, if you are trading in and around volatile moments, you may want to be looking at risk management elements on your trades. Also, guys, I think it's on Thursday. Great, it's on Thursday. The US has got its GDP figures coming out, and it's looking to be lower than expected, or lower than previous, I should say. So again, it's not looking like a strong month or strong week, I should say, for the dollar. But something again to take into consideration. Trading is 8% technical analysis. So whatever the technicals is providing you on the charts in regards to a trend direction, this will only add buyers and sellers to the markets. So just be cautious. And then finally, I've also got some yen news on Friday, some CPI data, and some unemployment rates. Now again, CPI isn't looking as good as last month, but then however, unemployment went up. So yeah, as you can see, it's looking like bad news for the yen as well. So again, it's looking like compared to last month, rates are down from 0.9 to 0.8, and it looks like unemployment's up by 0.1%. And again, if you look at the retail figures for the yen, it's down by 0.3%. So all in all, it's negative news for the yen come Friday. And then as you can see, guys, I've got some CPI data coming out for the euro, which is looking strong for the euro. So that's where, for example, for myself, because I'm currently shorting, currently been in this pair since last Friday. Now, with the market opening, it has dropped 30 pips already, if not more. But as I said, by Friday, I'll be perhaps be looking to exit this trade, simply due to the fact that I'm going to have a heavily fundamental day of trading, which in where the yen is going to be looking a lot weaker and the euro is going to be looking perhaps a little bit stronger for that 24-hour period. Therefore, if it goes with perhaps my consensus of this currency pair, I could see a fall Monday to Wednesday perhaps on this pair, hopefully see my target midweek, and then you could perhaps get some consolidation before perhaps rejecting this zone of 114.500 with some strong news on the euro and some weak news on the yen on Friday, and it could perhaps spot this pair back as a retest of specific zones. But till then, we shall see, but it's something to take into consideration. Guys, again, thank you for watching. All I have to say is stay safe, stay pipping, and we'll see you again in our next episode.